Mayuresh Joshi, the fund manager at Angel Broking, now joining us here to talk about the markets and also get stock specific. Hi Mayuresh, in an absolute carnage, the Lal Street being the worst performing market in all of Asia. You expect more pain ahead?
Afternoon, Nayantara. So with the impact of demonetization, I think the consumption theme that one was really talking about with the 7th Pay Commission recommendations coming through, good monsoons that we have witnessed, that has suddenly come to a grinding halt. So though there might be some short-term distortions, the consumer spending patterns will get defined over the next few weeks. So in terms of an earnings outlook for our domestic markets, Q3 is certainly going to be a dampener. In fact, Q4, that pain might very well continue. What will probably touch to FY18 earnings estimates, as most analysts on the streets have pegged it at 15-16% before the demonetization scheme, will definitely come down. Add to that, again, I think the global currency sell-off, the global debt sell-off that you're probably seeing is adding fuel to the kind of fall that we are seeing in risk-on assets, equity being predominantly that asset class. So largely, I think that volatility is expected to continue. It's also an expiry week. So largely, I think expecting the markets to grind lower. But again, I think you need to look out for stock-specific opportunities, but at lower levels. My own sense is that the markets will grind down and then probably consolidate, waiting for further cues to happen.
But is this a good time to invest in stocks? If we're going to see so much pain going ahead, let's also not forget other factors. For example, Janet Yellen's commentary that we saw last week on the impending rate hike, etc. Is this a good time to enter the market, to buy into stocks?
So again, I think it's very difficult to predict when the bottom for the market will be made, and though I think the pegging down of earnings estimates have started building in for our own equity markets, my own sense is that even if a Fed hike does come through in December, which looks a high probability at this point of time, you're also looking at the domestic rates being lowered. So in that sense itself, I think if the government does a few moves on the fiscal front by doing some kind of a stimuli program over the next few weeks, step up its infrastructure spending, and if one really believes the kind of windfall that the government will receive from the demonetization drive, infrastructure and government capex will keep on continuing at higher levels. That's a question of private capex coming through, and again, I think analysts were of the opinion that by Q4 the private capex should start reviving. With slowdown that we're probably witnessing at this juncture, I think the private capex can very well get delayed, but government capex will probably offset that. So largely, again, I think it is going to be the sectors where government capex is going to play a big part that can be big beneficiaries over the next few months. So whether that be power, infrastructure, transmission and distribution, defense, I think one really needs to be being very choosy at this point of time in choosing sectors that will probably get impacted in a beneficial manner over the next few quarters.
How much more of a correction though, Mayuresh, do you sense that the market could absorb? I mean, we are already at the pre-Trump levels, so to speak. We've seen a breach of 8,000 already. Where could the market head from here?
Well, again, I think 4-5% correction even from the current levels is not ruled out. And as I said, I think multitude of factors, what Trump does with his policies, what he's given out in his agenda before he got elected as president, if he really starts implementing that, I think one really needs to be sure on the kind of economic agenda that Trump has on its mind. Secondly, again, as far as the downgrades for earnings are concerned, consumption is going to take a big hit in Q3 because of these distortions that we'll see from a short or a small term perspective. But largely my own sense is that if the markets correct to those levels, you will have decent buying opportunities coming through. So whether you wait for that time period to come, I think it will grind down very slowly and gradually and consolidate. But again, my opinion is that if you've got money to deploy, you need to deploy at least a fair bit if the market corrects 4-5%. So I think a 15-20% deployment if the market corrects henceforth, I think should be a starting point for long-term investors.
Okay, fair point. Good chatting with you, Mayuresh. Let you go on that note. Thanks much for taking the time out and speaking with us today.
Thank you so much.
European markets as well kickstart trade in the Started off on a very quiet note, so a bit of a mixed bag. DAX trading flat with a positive bias. Italy down by about almost 0.5%, and largely quietish moves all across. FTSE just about scratching the green surface, and CAC as well holding out absolutely flat as we speak. But our markets, well, they're having a down day to say the least. 120 points lower for the Nifty as we speak, and now we're just about on the brink of that 79.50 mark. 79.54 in last check. It's a bloodbath for the broader end of the market, with small caps down about nearly 3% as we speak. Quick break. When we come back, lots more market chat.